Stagflation. What is stagflation? Well, I can tell you the market's really focused on it. Simply put, stagflation is rising prices, but slowing growth. We actually have a definition we can put up for stagflation. It's an economic cycle characterized by slow growth, high unemployment rate, and high inflation. And from what we're seeing out of the US, if you think about it, what are we seeing? Well, slowing of growth, which we just spoke about. Unemployment rate perhaps will start to rise. We've seen a lot of layoffs just in government alone, and we're all waiting to see how those layoffs in the US will affect the unemployment rate and will affect jobs data. We could see a lot of people on the sidelines looking for work over the course of the next few months. We've already seen a lot of layoffs and high inflation. This is basically the risk that we believe tariffs when you put on goods coming into your country, you're going to increase prices, and that obviously brings inflation. Higher prices, higher inflation. We have our next chart here, U.S. Consumer Price Index, showing that inflation has started to tick up a little bit. CPI has ticked up back to 3%, PCE 2.5%, CPI 3%. So right now, if you kind of took the middle road between the two inflation indicators, you'd probably say U.S. inflation rate is between 2.5%, 3%, 2.75, 2.8, somewhere around there, and definitely a long way from the 2% target. So for me, overall, stagflation, is that a possibility? Probably not in the short term. You're probably going to have to see inflation rates a lot higher before we really start to dig in and talk about stagflation. Stagflation usually happens when inflation is 6, 7, 8%. But make no mistake, higher inflation with slowing growth is definitely catching the eye of the Federal Reserve, no doubt, and catching the eye of consumers, catching the eye of businesses, and definitely not good for them, and makes the job of the Federal Reserve a lot more difficult when it's about to set interest rate policy, because you can't really cut rates to combat stagflation, and you don't want to raise interest rates either. So what do? And that's a dilemma that we'll have to see the Federal Reserve probably discuss and talk about in its, I guess, its upcoming meetings.